Welcome back to Lamb's Cryptoverse. I'm excited to report to you today that Glassnode did a year review of cryptocurrency, mostly Bitcoin and Ethereum. What I'm going to talk to you about today is the main important thing is that I have a chart from them that shows that we are, in fact, during the final months of the bear market bottom for Bitcoin and all cryptocurrency. And then I'm going to show you one chart that tells me with confidence why while we're at the final months of a bottom, right? And you got that curve at the bottom. We're at the final months of the bottom, but we're not at the bottom. So let's get started. Let me minimize myself a bit here. So the first one is Bitcoin analyze realized volatility. Basically, and actually this goes back a few years, basically because the market went down so much, and you see this with stocks too, the market went down a lot, meaning Bitcoin, and what happened is you get really low realized volatility at cycle lows. That just people give up and they become apathetic. And you see that with stocks, and if you study Greeks, you see this a lot with Greeks. Basically, the Greeks, in terms of stock option movements like delta, theta, and val, and what's that other one? There's so many, gamma. Basically, when you look at the Greeks, when a stock has a lot of volatility, maybe there's news and it crashes, what happens after it crashes? The options are flat. So if you are shorting straddles, basically where you're selling a call option, put option, that could be a really good strategy. And in turn, you see the same thing with Bitcoin. You're seeing really low realized volatility, and that's a good sign. We want to see that at a bear market bottom. The next chart is futures volume. This is something I've been talking about for a long time now. It's that futures volume has been too high. Not really futures volume, but what I'm seeing is a lot of speculation. There's been way too much speculation, and you see that in the futures and options market. Um, and it affects futures volume somewhat. So you want to see futures volume to be low. When the futures volume is low, that also tells you that maybe we're near a market bottom. So this is yet another good sign that the Bitcoin market and ETH market is at a bottom. The next one is one I couldn't confirm. I've been trying to confirm this for years. And it's the leverage ratio of open interest. And basically a derivatives leverage ratio. I've got it from CryptoQuant. I've always had it from CryptoQuant, but I never had it from Glassnode. And CryptoQuant always scared me. I always thought we weren't reaching the bottom because the estimated leverage ratio was way, way too high. Now you can see it's come down dramatically. Still, I think it could get lower. But the good news is I've confirmed this with the Glassnode data, and that's right here. And this is the leverage ratio of ETH and Bitcoin. You can see it's come down dramatically, and we've got an arrow showing how it's come down. That's ETH, and this one in orange is Bitcoin. Again, Bitcoin is orange and ETH is blue. You can see they've come down a lot. Just remember, just be aware that these two leverage ratios are calculated differently. But the whole point is to look at the trends, not the actual ratio itself. But I do always say I like to know how the numbers and charts are calculated. So next chart. This is the annualized perpetual funding rate versus a 3-month rolling basis. I know that's a lot to chew, but I think let's just do by piece, but I think you know what this is. Basically, we're talking about futures. And there's two different types of futures, right? You've got the timed futures in terms of you buying like a March futures or April futures or whatever, July, ones that expire. Then you've got perpetual futures that do not expire. So you don't have to worry about rolling risk, right? Rollover risk. So that's why a lot of people are buying perpetual futures. And annualized just means that it's annualized. So you're getting, just like you look at an interest rate, you want to make sure you look at an annualized rate. Same thing with today's CPI. If you see the CPI is up 0.1%, what does that mean? That's a monthly rate. You want to annualize it. So that we've got that straight. And the 3-month rolling basis just says what's the funding rate doing versus last 3 months. That's all it's saying. And you could see a very good thing that when we had the FTX bankruptcy, we had a very low perpetual funding rate. That's what we want to see. This is what futures buyers are paying the other side to take, basically. And so when they get really bearish, this number goes down. So you want to see this. But it could be lower. It was much lower in March of 2020, which was not on this chart. So we could still go lower, my friends, but this is still a good sign. Now, I don't need to spend much time on this because we all know about this one. This is realized losses, profit and losses, and you could see we got a lot of losses here because they're in red. So we're not gonna, kill a dead fish, beat a dead fish, whatever that is, whatever the saying is. We already know there's lots of losses. Now I'm going to show you the most important chart of this whole annual review, and it's a very positive chart, and here it is. So we're going to spend some time on this one. This is showing, I'm going to hide myself here so I can make some room so you could see this. I want to really focus on this. This is showing the profit and loss by return bands, and the long-term holders where they're focused on 30-day moving average. So basically what you want to see is this red area being down here, and Glassnode has put a line here where this red line intersects these bands, and you could see that there's been an 80% to 50% drawdown. So this is exactly what we want to see. We want to see long-term holders losing money. That's what this is showing. So this is excellent. This, my friends, is exactly what we want to see at a market bottom. And if you want to see more information on here and how it's and have it explained to you, you could hold the video. I'm going to go up to the definition here. See, it's saying here, contribution of long-term holders are showing the two largest losses in history. So that's really, really good. And these losses are referring, I think the bands are up here. No. But basically, these red bands are showing where the losses, where the long-term holder losses are. And you can see here by the color. So if they have, for example, if they have the long-term holders have really big gains, you'd see these blue peaks here. So we don't want that. The blue peaks and green peaks are where you want to be selling Bitcoin. But remember, this is not financial advice. I'm only here to entertain you. And last but not least is why I'm saying that we're making a bear market bottom, a bottom curve, but we're not at the bottom. That's because Bitcoin miners, they're hurting, but they could hurt more. There could be more bankruptcies. And why am I saying this? Because the hash rate and the difficulty rate have yet to come down substantially, but only now after the two bankruptcies of Core Scientific and some other miner. After those bankruptcies, you're seeing the difficulty finally come down. We've got a 7% decline here. You could see here in the note here, largest downward difficulty adjustment since the great miner migration. I believe they're talking about China, when China banned Bitcoin mining. Actually, you can go up here and read about this here. July 2021 was a great mining migration. And again, as I mentioned earlier, the hash rate is too high, and you can see finally there's been a cross, and Willie Wool's a big fan of this. Look at these crosses when the hash ribbon, as Glassnode says, inverts. Okay, that's really, really important. When you see long-term, they didn't say it here in the notes, but basically what you're looking at is here it is right here. You're looking at the 30-day cross to 60-day. So you're seeing a lower hash rate. And what's really disturbing for Bitcoin, if you're a miner, this chart scares you to death. This chart here shows you revenue per exahash. I know it's complicated, but what it's showing you is, even though, here's where it gets scary, even though the Bitcoin price is higher here now than it was back here, the hash price is near all-time lows. So meaning Bitcoin prices are high, so Bitcoin higher than they were at a previous low. But miners are not making money. They're basically mining themselves to death because they did. And I mentioned this earlier with the energy frackers. Remember, those energy fracas natural gas companies like Chesapeake. Basically, they borrowed all this money, debt and equity, and they had to put the money to work. And they bought drilling rigs. And that's what it's exactly what's happening. I don't know why and no one's talking about this, but basically, the Bitcoin miners are spending all their money on the next greatest drilling rigs, and then they advertise it on their presentations. They advertise how the mining production cost is only so and so, is only like $8,000, when it's in fact the total all-in average production cost is far higher. So what they're really showing you is the incremental production cost on the next greatest bleeding edge Bitcoin mining rigs, ASICs rigs. That's what from Antminer. That's what they're showing you. So be careful with what you read, my friends. And then later on, the Glassnode in their review talks about Ethereum, but we're going to talk about that another time. But basically, what they're saying here is after the merge, Ethereum has become much better in certain ways in terms of number of validators, which I'm not sure about, but that's what they're saying. And they're also saying that Ethereum has become from a very inflationary or somewhat inflationary asset to one that's either 0% inflation or even deflationary. Well, thank you all for listening to Lamb's Cryptoverse. And if you like this, please like us and subscribe to us. Take care and have a great holiday and New Year. Bye-bye.